Okay, folks, welcome to a Friday countdown video. I don't do these much, but I didn't do a Thursday night stock charts live last night, so I figured I'll make it up today. So what we're going to do is we're going to go over the price action of the major averages midday here on Friday, the 9th. And we're going to then take a look at the weekly charts. How are we poised to close out the week? Because they're going to give us an indication of how we should be positioned for the new trading week. So we are currently long of NUGT. This is one of our not one of our key core positions, but GDXJ more so. This is more of a trading instrument where we've been selling covered calls against. We had a rough day yesterday, good day today. We sold the 6150 strike covered calls. Those will expire, probably worthless today, and we generated nice income, and we try to do that each week. Now, if we do close out the week by chance above 60, I'm not going to be looking to sell weekly options on this position or the GDXJ position. I'm going to look to sell deeper out of the money calls going out to the 75 or 80 strike on the NUGT. This is a leveraged ETF putting you long on the gold miners. Or we will, not or, we will sell either, I think right now they're 43 days out or the strike price. I think 43 days out, August the 20 strikes. So that's the game plan. NUGT. Let's take a quick peek at the markets overall here. A fairly good bounce back Friday, short covering Friday. Let's remember that we're going to have big bank earnings coming out fairly soon. I was not convinced yesterday that we were going to have a crash. It felt like it. I said, you know what? Let me jump in my car, go out to the North Fork of Long Island with my wife, visit a couple of wineries, and have a good time and avoid the shenanigans, because there's very little chance they're going to let this market crash in advance of earnings. So we have the Russell 2000 up top here. In fact, let's go to the big chart. The Russell 2000 at current, nice bounce back, no doubt about it, up over 1.75%. Keep in mind, we're going to have resistance above. The question is, this is only a 15-minute chart. We want to pull back to a 4-hour chart. Do we break any of these support levels below, or do we yet again break out above this resistance level, threatening to break out to new all-time highs? We've been here since February waiting for something to occur, and all we've seen is sideways price action, false breakouts, false breakdowns. So it's a bull market. Therefore, we're going to side on the. We're going to err with caution and say that the path of least resistance remains up with the Russell small caps. This is a consolidation, strong day. We'll go to the weekly chart, see how we're poised to close out the week, but at current, looking very strong. Looking at the NASDAQ 100, they're up, not as strong as the small caps. Why? It's because they've already had a stellar run. Also, you have yields rallying today, and that's not the best thing for the tech stocks. Now, yields can continue to rise, but once we start seeing 1.5, 1.6 on the 10-year yield, these guys are going to begin to buckle. Now, you can see that we broke down yesterday. Now we're attempting to recapture. So much as like what you see when you get a breakout, then you get a pullback and a retest of what was resistance should now act as support. The exact inverse is the same here. They're trying to, at current, retest what was support, but it's now going to act as resistance. But it's a strong bull market. There's a good chance that we recapture the support level because the path of least resistance remains to the upside. Taking a look at, I don't want to go to currencies yet. Where's my S&P 500? There we go. Hey, McCarter, how you doing, buddy? Good to see you. S&P 500 just on a tear today. JW, hello. We'll check it out for you, JW. No doubt. We'll take a look at it. I think that the Chinese, what they did with these technology stocks that are traded here in the United States, they just took out a gun and shot themselves in the foot. Check company WOW. Okay. Is that the name of the company? WOW? All right. So, healthy breakout here on the S&P 500. Broad-based rally today. Now, what's the proximate cause of this rally? Well, it's simple. The proximate cause of the rally is this: the pullback on bonds and the rising yields. It's allowing the banks to rally, transports to rally. The transports had a big bounce back today. So this is the proximate cause. Forget about the noise that you're hearing on CNBC. They just want to take parking space up in your head. It's about confidence. Remember, this is one big con game. So right now, it's a con game, and they want you to believe that the economy is strong, therefore yields rising, 10-year yield pulling back after a stellar run. Now, taking a look at the U.S. dollar, this is another reason why stocks are able to rally, especially your commodities. Copper, at last look, was doing very good. Before we leave here, dollar down on the day. Where's copper? Copper, I had you up before. Where are you? Coffee. Do. Always when I'm live. There we go. So, copper is a very powerful day today. Rallying, healthy consolidation here, wedge formation forming, copper looking strong. What's U.S. Steel doing? U.S. Steel, a big hit today. Wow, what a move. This is all because of yields, folks. It's all about confidence. And you're also seeing it on the gold mining stocks. Where's gold? Gold up about a half percentage point, getting ready to break out here. Crude oil bouncing back. Rough week, but bouncing back. Natural gas and fuego. I mean, we're getting ready to lift off here again on natural gas. Huge macro breakout. Take a look at your weekly charts, monthly charts on natural gas. All signals imply we're going up higher. Let's take a look at the weekly charts and how we're poised to close out. Hey, Sam, how we're poised to close out the week. All right, let's get rid of this. Let's open up a new browser. Get all fresh. There we go. Bam. All right, let's get rid of this junk. All right, let's begin with the 10-year yield. These are all weekly charts, folks. So what we do is we review the weekly charts to identify where we may be going next week. Normally I do this on Thursday nights and then again on Saturdays with members, but last night just wasn't a good night to do it, so I had to skip it. but we're going to make up for it now. So 10-year yield, weekly chart. I mean, real strong bounce back here. I mean, if we were looking at this last night on Thursday nights, this was one but ugly chart, breaking down below the lower band of what should have been a bull flag setup. I think that this was a washout or a blow off top on bonds, a capitulation sell off on yields. Stokes now hooking up weekly time frame. RSI still weak, trading down below the 50 mark. Obviously no volume to be watched. TLT, this is the 20-year bond ETF. Up week. Here's the caveat. Big topping tail. Now, that doesn't mean that the rally in bonds is over. It just means that in all probability, after hitting resistance and after tapping the third standard deviation Bollinger Band, we're probably going to pull back a bit here. And remember, we've been talking about this for several weeks, that we have the potential for a head and shoulders setup. Left shoulder, head, right shoulder. Volume to the upside, good. Let's take a quick peek at the daily chart. Big gap down today. This was unsustainable. I mean, even if you took a look at the daily chart of the 10-year yield, you know, this downtrend had to get relieved. There needed to be pressure taken off of this selling, and it was a foregone conclusion we were going to get a rally at some point in time this week on yields. What else do we have? We did the yields. Tips, weekly chart. As it stands right now, 12:10 Eastern Standard Time, we have a bearish key reversal bar on the tips. Those are Treasury inflation protected securities. And it's worth noting that we did hit new all-time highs this week. So for all those out there that are in the camp of deflation, we're in deflation. That is not what the tip market is sending us. It's telling us there's concern out there by institutional investors that there is inflation. And it's not transitory. It's not temporary. Tips daily time frame. We're off the lows of the session. Volume, very light so far in the day. Very light. Watch for a rally back here early next week on the tips. I think this is a buying opportunity. This is an end of day chart. Let's bring up the UUP. The other chart was the Dixie basket. Now, the UUP, let's bring up my saved charts. The UUP is on the precipice of flashing a bearish reversal bar. We had a very strong beginning of the week, but at current, we're flat. We are on the week. So what I want to do now is take my crayon out and play connect the dots. Is this a new lower high for the US dollar? Is this rally over? I think it's too early to make that statement that it is over. We do have a W formation formed here. Can't be ignored. Volume to the upside this week is low. But the dollar is going to probably come under at least some short-term pressure given the reversal this week off the highs. Yeah, I saw that about the IMF. They're contradicting the Federal Reserve. For those who didn't read, IMF said that the U.S. inflation is not transitory. I'm paraphrasing. VIX. not a bearish reversal bar. We're up on the week, but certainly a reversal bar. RSI still looks good here. Stokes look horrible. Absolutely horrible. Rolling over down below 20. The thing is that when these get resolved within the next 2 weeks or so, there's going to be a ruthless rally back. Whenever you see a rollover on Stokes down below 20, it's a horrible event to happen if you're long of whatever you're tracking. But the rally back after this oversold condition gets resolved is equally as ruthless, at least in the short term. Daily chart. Brutal day. Brutal day. The Dow Transports. The weekly chart is not looking good, right? We're down over 1.5% on the week. That's subject to change. We have a few hours left to go in the day. Stokes trading down below 50. Rallies tend to fade. But when you take a look at a daily chart of the Dow Transports, you got to say, wow. I mean, wow. This is a big day. Up over 2% at current. Volume is going to come in light. It's going to be an interesting close today. The Dow Jones Industrial Average, weekly chart, we are up slightly on the week. We were negative. It looks as though we're probably, should we close positive on the day, we're probably going to get a continuation breakout next week. We won't know for sure until tomorrow when we take a few minutes to watch the review the closing charts of the major averages on a weekly time frame. Volume is trending down dramatically here. So we've had 3 consecutive up weeks, but volume is waning. Daily chart. Very powerful day. I mean, we really need to update this to do it justice. And I always talk about retests of a breakout point, and that's exactly what you've seen here. So we don't want to lose the opportunity to talk about this. Okay, so what's happening here is that, there we go. We saw a breakout here on July the 1st. Rallied, pulled back, retest 1, retest 2. Yesterday was retest number 3, and it held. We held the breakout point. Today, they're trying to get a continuation breakout put together here. The only problem is that there's very little in terms of volume. Now, keep in mind, it's lunchtime. It's the summertime. You have a lot of these guys out in the Hamptons. They may be waiting for the computers to send buy orders down in the final hour of trade or sell orders down. We're not going to know. I doubt they're going to sell this market off in advance of earnings. Hey, Clark, how you doing, man? Good to see you. So the Dow Jones looking okay. My only concern here is volume on a daily time frame, volume on a weekly time frame. Moving on, S&P 500, weekly chart up just shy of a 0.25 percentage point. Folks, this is getting long in the tooth. The weekly chart of the S&P 500, yes, we're at all-time highs, but you can hit all-time highs and have pullbacks. These Stokes are very, very extended. Where are we at now? 94.24 on the slow Stokes. And just like we saw with the Dow Jones, volume is really beginning to dry up here. Call it the summer doldrums, call it what you want, call it cupcakes, it doesn't matter. You need institutional accumulation to keep these markets moving up higher, because if you don't, they can get bid up higher by the algorithms, but that fall is just going to be horrible when a correction ultimately does come. Daily chart. Daily chart looking okay. This is not updated yet for volume. Let's bring up the spiders. Check volume on spiders. Very, very weak. Very weak volume. So when you see this, when you're looking at the markets, this is why we don't day trade. I don't day trade, is because, you know, it's noon. Arguably the day is, you know, just shy of half over, and you're up on the day by over 3/4 of a percentage point. The problem is there's no volume, so you can easily see a sell-off into the close. But for that matter, we could see at the last minute some buyers move in here. Way too early in the day. Never make a decision about the stock market during lunchtime. That's why I'm talking more about the weekly charts than anything else, because they're not subject to change much. Whereas the daily charts, a lot can happen between now and the closing bell. IWM, small caps. They were really breaking down earlier in the week. What saved the small caps was the rise in yields. Weekly RSI still trending down. We're down on the week by 1.5%, but we were far in a real dangerous, precarious situation yesterday as we closed down below this lower band of support in red. Volume is going to come in light. Let's check out a daily chart. This to me appears to be a dead cat bounce off of an oversold level, the third standard deviation Bollinger Band. How is volume? It's very light today, very light volume. Stokes are weak. We have put in a new lower low on the Stokes and on RSI, lower highs, lower lows. We'll check tomorrow whether or not these hockey sticks on RSI and the hockey stick on the fast line of the slow Stokes do in fact close up on the day, or do we fade? We don't know. Way too early in the day to make that call. Qs. We are up on the week. We were lower, now higher, just over a 0.5 percentage point. Stokes a bit overbought here. Volume is going to come in significantly below average. Let's go to the daily chart. MACD losing momentum. Light volume. Stokes rolling over. Let's take a quick peek at an intraday chart. Let's go to the 2-hour chart. This is a monthly view. We do have a new monthly high. Take note of your monthly chart of the trip Qs. I'll mention the fact that we are above 80 on RSI. It can go higher. It's been there historically. You saw it back here in 2018, back here later in 2018, prior to that back in 2014. So there's still more room left to go here. But one concern that I do have is this. Now, this is a monthly chart. It's only the 9th. A lot can happen here. Is your ultimate oscillator. We're putting in new all-time highs. But we're seeing a bearish divergence on the ultimate oscillator. Now, this is nothing to trade off of. All it is just a clue. Like you're Sherlock Holmes trying to find when the market's going to break. This is a clue. That's it. Simple as that. You do nothing with that. You just build up more clues, and then you get a clearer picture. So right now, we're just accumulating data. We're overbought on RSI, but we know, we're grown up enough to know it can go higher. Stokes are extended, but we know, being grown up, they can go higher as well. We are trading above the upper band of this long-term uptrend channel. This is a bit of a concern because the question should be, is this truly sustainable? And are we going to retrace, as we have many times in the past, back down to this lower band of support? Jury's out. Quick peek at a 30-minute chart. Okay, moving on. The banks. All right, down on the week, but the banks are where we want to keep looking for opportunity. Why? If you believe that yields are going to continue up higher, then you need to be long of the banks. Take advantage of this pullback. Why? Net interest margins. Their margins improve when yields go higher. Why have the banks been weak? Yields have been dropping. So it didn't help also that JP Morgan warned about their trading revenues for this quarter. Anyway, we're down 1.11% so far on the week. Let's go to a daily chart, see how we're doing today. It's got to be a pretty day. Nice gap up higher. Stokes still above 50. RSI, hockey sticking up. That's good stuff, but still down below 50. Volume light. We may have a higher low here. We don't know if that will be a higher low until we break out to a new higher high above 37.04 on the XLF. But right now, we don't want to lose sight of the macro view. What's that macro view? We have a breakdown to new lower lows. We have a lower high and a breakdown to new lower lows. So the macro trend is under pressure, but it can get resolved to the upside, assuming that yields move up higher and the S&P 500 doesn't puke all over itself. Technology. Weekly chart up over 0.75%. Volume light. Daily chart. Hey, Larry. XLK weekly, or we'll check it out for you, Larry. The weekly or daily time frame? RSI not confirming new XLK highs. Not this overbought since early September. Yeah, well, and you could argue that we're now beginning to put in a lower high on RSI, and that we're on the other side of the mountain. Meaning, we were trending up this mountain. Now all of a sudden, we're beginning to inch down below it, and maybe it'll get walked down. As yields move up higher, technology is going to come under a lot of pressure. Watch the 1.4. Where are we at right now on yields? We are at, let's update this. Yeah, technology could still move up higher here. We're at 1.35 on the 10-year yield. Once we start getting up here at 1.5, that's where technology just couldn't take it. Just couldn't take. They couldn't take 1.5. Think about that. Well, the RSI did peak on a daily chart, Larry, right here. It did do so on a new all-time high. Now, the question is, do we break out to new higher highs on the XLK and we see a failure of RSI to validate that new all-time high? Or are we simply not going to break out, put in a lower high, and then if we break down below 148, then we have the potential for a continuation breakdown. So Stokes are very extended, volume horrible, and momentum on the MACD. I mean, we're really losing a lot of momentum here. So you have institutional guys out there that are looking at the market and looking at the bond market, because if you're going to trade stocks, you need to look at the bond market. As boring as it may be, you need to know the correlations of what stocks do well when yields rise and when yields fall. When yields rise, technology simply just does not do that well. Up until a point, and a 1.5 handle is a problem for technology. Let's take a look at the weekly chart. Volume is probably going to come in light on the week. So this is going to be potentially what, 1, 2, 3, 4, 5, 6, 7, 8 weeks. 8 consecutive weeks of the XLK moving up higher. On light volume, no less. This is not going to end well. And if you take a look at the monthly chart of the XLK, we have a new monthly high. RSI 79.44. And just as we saw on the Qs, I believe it was, we're not getting any validation of these new all-time highs on Ultimate Oscillator. This is a true bearish divergence here. The semis, down on the week, down over 1.25%. How's our volume? Volume's light. You see the difference here? Semis were probing all-time highs. What was Ultimate Oscillator do? Validating. We're not getting that on the XLK or on the Trip Qs. Biotechs, rough week. But we do have potentially a higher low here on the biotechs. This is a leveraged ETF. Just a caveat there. We broke out on daily chart. Good stuff here. Volume a bit light. Stokes need to get resolved. You can see a V-shaped recovery on Stokes. We've seen it here, here, here. But sometimes you don't get it. So watch for a retest of, let's call it, $6 to $9 a share, give or take a dime. And I would look to open a trade next week. Consumer discretionaries up a 0.5 percentage point. They were down. Volume is going to come in light, but it may exceed last week's volume. Daily chart. Very light volume here. So consumer discretionary is looking okay, but you need volume. Now energy, you know, if oil bounces back here, before we go to energy, let's take a look at oil, because there's a very, very steep correlation. I mean, I have it up here. At current, they trade together 82% of the times. They were more tightly correlated. The correlation is actually coming a bit looser than what it once was. Now, energy is down nearly 4% on the week, whereas oil is down a little over 1%. and has bounced well off the lows. But if we do begin to break out yet again on oil, you really got to take a look at energy. Down volume is potentially trending lower. We have a few hours left to go here. I'm not sure whether or not we'll meet or exceed last week's volume, but it's not really looking all that promising currently. Let's go to a daily chart. Good reversal bar today. We recaptured support. You know, if you believe that the reason why, going back to the 10-year yield, if you believe that this rally today is not simply technical in nature and the rally is the beginning of a longer-term trend because of the economy building up steam, behaving well, then you got to be looking at energy. You have to. Especially with natural gas prices moving up higher now as well, along with oil. Sam, did you watch the Euro USD? Seems like a big triangle. I stopped watching the Euro. I had an alert that fired off. I think it was Wednesday when the Euro broke to a new weekly low, and I said, you know what? I'm going to stop watching it. But it must have rallied back to recapture. Let's bring it up. XLE we'll go with. I think that's it. No, that's not it. Dumbass. I haven't looked at the currency ETF in quite some time, so I forgot it. When was this last updated? Oh, this is as of July. Hold on. Let me go to the intraday chart. We'll check out the futures. God damn it. Yen pulling back. Yeah. So here's where we took out the lows of last week, and I stopped watching. Now, this is a weekly chart. So now what we flashed here is a bullish reversal bar. So what they did is they blew out all the stops down here. Then the buyers moved in and they bid it back up. Euro's looking good. This is a 4-hour chart. Euro's looking good here. Stair stepping higher, higher lows. And this is bearish for the dollar. So if you're looking to buy gold, you know, you really need to start looking at it because gold is holding 1800 very, very nicely. You have the dollar under pressure. Euro looks like it wants to go up higher. Yes, the yen has come off a little bit, but and maybe the pause refreshes. So now's the time. If you want to buy that gold, start nibbling on it. Start thinking about it. All right. This is an end of day chart. Let me change this. Go to the GLD. GLD, hammer formation on the week. Perhaps the beginning of a higher low here. We don't know yet. Let's bring up my saved charts. That's better. Let's update this. So this is a secondary resistance level. The primary resistance level is going to be up here. Let's change this to a solid. So at current, we have a higher low coming in on a weekly time frame on GLD. In and of itself, that means absolutely zero until we start breaking out above resistance levels and begin to ultimately break out to new higher highs rather than putting in lower highs and lower lows. So gold is looking good, not looking great, but looking good. So what we're doing right now is trying to memorialize what we believe to be the beginnings of a change in trend on gold. And it's certainly not bullish yet, even though we've been up for the past 3 weeks. We've been up marginally, nothing huge. We're up 1.24% this week, nothing to sneeze at. But when gold goes, I think we're going to get a parabolic move higher on gold in fairly short order. And what that's going to require is a weaker US dollar. So watch for a new weekly low next week on the US dollar. That may ignite the price of gold. Because remember, August is not too far away. It was August of last year where we hit all-time highs on the price of gold. I can't believe it's been a year. GDXJ, gold miners, still down nearly 2% on the week. Stokes still down below 50. RSI still down below 50. Now, so this is, I wouldn't want to buy more here. Not yet. Could we be basing here and beginning to form a higher low in a W formation? Absolutely. Daily chart. Daily chart looks really good. Loving the Stokes. We're now putting in higher lows. They're hooking up. Loving the RSI. Higher lows, hooking up. Inside day today after getting pummeled yesterday. And we're at the highs of the session at current, which is good to see. So the gold miners are improving. Silver, down week by nearly 3%. Silver always so volatile. Daily chart. Very nice. And this is what I discussed with members earlier in the week on Market Wrap, is that, you know, I hated this price action here. This is all a sign of indecision. And I didn't like it. I didn't think this rally was for real. Sure enough, they gapped it down. And then I started saying, you know what we need here is a pullback and a higher low to build a base. I didn't think we were going to just go screaming up higher from this type of price action. You need a base to get built. I think that base is being built, and now's the time to begin looking. If you're not currently long of silver, start looking to build, or if you already own it, start nibbling to add more, because I think that we've seen the lows on gold and silver, and we're probably going to proceed higher, assuming that the US dollar moves lower. It's all about the dollar. It's all about bond yields. We are long of Coinbase. Coinbase doing good today. Let's update this. Very nice. How's our Airbnb doing? Very nice. Good. Good day. Very, very good day today. Not for our shorts, but for our longs, doing very, very well. We have a lot more longs than we do shorts. So net, a solid day. Let's take a moment. I'll do some chart requests. If anybody has the time, I'm going to swap my background. Folks, this is going to be brought to you by TrendSpider. And they just launched a new app, 35% discount code below. Their app is outstanding. It's very, very good. You download it, you enter user ID and password. Every single alert, every single watch list gets transferred over. As a matter of fact, use the link below. They have a 45% discount promo deal going on right now due to the fact that they launched the app. So 45% off, I believe. All right. Who wanted me to take a look at stuff earlier? FXI, China. That's right. All right. So long ETF, China. Not looking good. Horrible, in fact. Why is my RSI? Here we go. Something's up. All right, I'll fix it later on. We've broken down to new weekly lows, big gap down. I think the Chinese really made a big mistake with the shenanigans they pulled with that IPO. Was it Didi, I believe it is? Let's bring it up. I want to validate that. Yeah, Didi Global. That thing is still falling. I don't know how to... I've been saying this for years. I don't know how you own a Chinese company. I have no idea. Mainland China. This was inevitable. How's Baidu doing? We'll go back to the FXI in a moment. Baidu took it on the chin this week. We're bouncing today. Let's take a look at a weekly chart. Baidu's in a lot of trouble. We broke weekly support. I think that Chinese stocks are untouchable. Here's a monthly chart of FXI. We've broken to new monthly lows. We have a downtrend here. This is a downtrend. Lower highs, and now we've broken to new lower lows. I would avoid any mainland China stock. Look to Vietnam, look to India. You want emerging markets? Not that China's really an emerging market anymore, but look to Vietnam, look to India, look to Brazil. Those are the places to be. Watt 480 shenanigans, hey brother. WATT. This is a monthly chart in Gorgeous Corporation. Looks interesting. It looks good. I mean, we're down on the month, but I'm looking at the macro view here, and I don't even need to. The automated trend lines are picking this off for me. Here, I'll take them off. Watch them pop back on in green. There you go. So we're hugging the lower band. This is a buy. I'll drill down to a weekly or daily time frame, but I like this chart. You can see how we have resistance above in red, but we're hugging the lower band of support. Let's go to a weekly chart. Weekly chart, we have an automated trend line here telling us we have resistance above. I still think that this could be bought small, stay small, wait for that weekly breakout. Let's do this. No sensitivity. Let's leave it on more than that. There we go. All right, so our alert's set. Now, RSI is consolidating. That's okay. Going back to that monthly chart for a moment, I wanted to talk about RSI. And RSI is putting in higher lows. The one caveat, I'm not going to worry about this too much, because what I think this is a W formation forming. We may be putting in a W formation on RSI. So I would stay small here with my opening buy. Wait for that weekly breakout to add more. Daily chart. Good day today. I think you could nibble on this. I don't see anything wrong with this stock. Yes, it's under pressure. You got to have patience with it. If it's going to be a long-term hold, now's the time to buy it. Looks pretty good. So Watt looking very good. I don't blame you, Sam. I don't blame you for being scared. Wow installed my Wi-Fi and I was taken aback. Yeah, I'm curious. It looks like it's breaking out. Well, let's take a look at it for you. Is this the company Wide Open West? I'm going to assume that it is. All right, so I think overall it's bullish. We're down on the month, but we did put in a new monthly high. Plenty of time in the month to come back. RSI a bit overbought and flattening, but again, cool. Okay, good. This is the stock. Good. I'm going to assume this is a micro cap, small cap at best. This could easily rip up higher. I mean, all your moving averages. This is what I call a fan. All your moving averages are going in the right direction. It looks like a fan. Exactly what you want to see. The uptrend is clear and defined. Weekly chart. Now take note. I'm going to take the automated trend lines off. Take note of where your resistance is. You saw it last back here in March. It's right up here at current at 22.12 per share and rising. So as long as this thing doesn't go parabolic right away, you could still buy it. Just be aware of the fact that you have weekly resistance pretty close above. Daily chart. A good day yesterday showed relative outperformance relative to the rest of the market. It held support. Again, automated trend lines. I've never looked at this stock. I did not draw these trend lines. Click of a button. Reversed off the lows of the day yesterday. Retesting the breakout point today. I think it goes higher. Good looking stock. Just beware of that weekly resistance level above. And you're good to go. RSI rising. The only time I would get nervous is if we take out yesterday's lows. All right, folks. With that, thanks for joining in. Smash that like button. Thanks for being here. Everybody have a profitable trading day. Don't forget, TrendSpider, 45% discount code below. Use that link below. Take care. Have a great weekend. Be well.